Today, we're going to have another conversation with an amazing investor. He's making about 100 offers every month. The problems he's running into and the gap between what the seller wants and what reality is or what you can afford to pay, and putting together creative deals in today's market.
We got a special guest today. Anton's going to be having a discussion with John Carey, a real estate investor. So John, go ahead and introduce yourself. Tell us a little bit about what you do, and then you guys can kick it off.
I'm a full-time real estate investor. My name's John Carey. I've been a full-time investor for about 15 years. I have rentals, quite a few doors, mobile home park. I flip. I work in-state, out-of-state.
And what did you do before that?
I was in the automotive business.
Oh.
I was an engine core distributor.
Yeah. And then what brought you over to the dark side, the good old real estate investing?
Oh, I bought my first duplex at 21, so I've always kind of been in the market. So
That's awesome. What's rattling around in your brain today? What are your questions? How can I best help today?
The main concern I have is I'm looking at commercials properties.
Yep.
And like mobile home parks and multi-units like apartments.
Yep.
And everybody's priced at pro forma price, not actual numbers. And that's where I have a problem. Is what they want for it is at the pro forma end, and what its value is what it's performing at now.
Yeah.
So how do we bridge that gap?
And debt is high.
Debt is high and interest rates are insane.
Yeah, so it's harder to get debt right now, and interest rates are super expensive. And then where are you finding most of your deals?
Actually, I'm looking all over the country. So
Okay.
I actually looked at one last night, local.
Yep.
But last week I was in Illinois.
Yeah.
Nowhere, Illinois.
Yeah.
And looked at a mobile home park. Numbers didn't work.
Are you cold calling for those? Are those coming from real estate brokers, wholesalers?
Wholesalers mainly.
Wholesalers
Yeah.
mainly? Okay. So first script, or what I would immediately go into is if my deal flow is coming from wholesalers, is I would build relationships with them, and I would start to go back through and be like, hey, John, I always want you to make money. And because, both of us need to win here, what do we really have this under contract for? Because sometimes when a wholesaler brings you a deal, they're going to go just tack on $100,000. And that may be the difference between the deal working and not working in these examples.
Exactly.
Okay. And the second part of this, now this doesn't matter if it's a wholesaler or whomever. As I run my numbers, what we do is we turn around and go back to, the deal provider, and we show them the numbers to explain why it works or doesn't work. And then if it doesn't work, it's, hey, can we go to the seller now and ask for a price reduction relative to this? Okay. Now, there's two things, though, that we got to be really just aware of in this market. With interest rates just being at 3%, 3.5%, a lot of sellers are still living in the past.
In that world. Yep.
And then they haven't readjusted to today. And their cap rates are also reflective of the past. And the cap rate hasn't adjusted to today. And their valuation model is stuck on 3%. So when the Federal Reserve took us to 0% interest rates and left us there, what they did was they inflated the value of every asset and created speculation, right?
Exactly.
So they're chasing all these assets. So the mobile home parks, the office buildings, the multifamily, they all started getting giant valuations because there was so much liquidity in the system. Part of it may be, too, that we were just slightly ahead of the curve. And you have to wait for that pain to settle in a little bit more. So what, Benji and I have been talking a ton about is, the timing of the market and that how this is just starting and being ready. So one, I think you should totally be out there just, knocking the doors, making the phone calls, chatting with the people. Two, have the conversation with the deal provider about the numbers that work for you and structures that work for you, because it may not be price, it might be terms. We might be able to take a deal where the seller wants more than you and I are willing to pay, but maybe they're willing to carry it at a discounted interest rate.
Yes, I do a lot of that creative stuff where it isn't always the price, it's the terms.
Yeah.
Terms make the deal a lot of times.
Yeah, they 9,000% do. Also, whenever any investor, whether it's you or someone else, says, I'm not getting a deal, I actually think it's they're not getting enough deals put in front of them. And the problem with like RV/mobile home parks right now is they're really hot still.
Yes. It's a hot market.
It's a hot market. And then second, a lot of the U.S. has stopped permitting the future development of those. And so mobile home parks specifically, I believe there's going to be more RV parks, but I believe the mobile home park is going the way of the extinct dinosaur, and that most of the U.S. is basically going to stop permitting them. So, I mean, you're from our area. Mm-hmm. When was the last time they built a new mobile home park anywhere here in the north end of the Seattle metro?
I could think of couple RV parks, but as for mobile home parks, not that I can think of. RV parks, yes.
RV parks, yes. Mobile home parks, no. So what we have to realize as investors is mobile home parks are on the endangered species list. I think that's part of it. RV parks, I think, are going to be here to stay, and I think they're going to be a great cash cow. I love the one that they built up there in
Arlington.
Yes,
I know the guy.
Yeah. Mr. Klein. Yeah, phenomenal.
Right. And they put one in just up in Cedar Woolley, just off Cook Road, too.
Oh, okay. Perfect.
Took him a couple of years to get his permits, but he's full 90% of the time.
So just kind of going back to this, my thought would be is increase the amount of deals that you're looking at. Do some of your own additional prospecting. Do some of your own additional letters, because... And I like wholesaling, so this isn't meant to be negative against wholesalers, but a wholesaler is going to take the quickest, fastest route to money, which may not necessarily be getting you the best deal. It may only be getting you 5% off, and that may not compensate for today's high interest rates. Or like you were saying, you got to get a real creative deal. What was the one that you were mentioning that you said you looked at last night?
It's a RV park.
Yep.
It's got 8 cabins on it. It's got 17 RV spots with full hookups.
Cool.
It's got 6 spots that are more or less dry camping. No sewer, but they have water and power. It's got a double wide on it that the manager's been in. We wanted $1 million for it.
What like cap rate is it currently performing at?
Well, it's part empty because a lot of people moved out because they know we were selling it.
Got it.
But I think cap rate could be probably 10%.
Oh, that's good.
Full, so
at full occupancy, but how long would it take you to get back to full occupancy, and how much cash?
Back to full occupancy, I'd say within a couple of months.
Oh, cool.
Because it's in an area that needs housing.
So it's in a desirable area.
The manager's telling me, he's been there 12 years, that the owner decided not to allow pets, and people moved out. He says, if you allow a small dog, he goes, I'd have it filled by the end of the night.
And so is this something, if you put this deal together, you'll keep the existing manager in place?
No, he's moving on.
Oh, so he's moving on also.
It's in my area, I'll probably self-manage.
Okay.
So
they wanted $1 million. What did you end up offering?
Offered $900,000.
Yep.
They originally wanted $1 million, $500,000 down. He carried a note at 5% for the other $500,000.
Yep.
At 5% interest. So I countered him at $900,000, $300,000 down. He'll carry a note on the $600,000 at 5% for 5 years. And I get the park model that he said he wanted to take, and I get his snowplow, his tractor, and his lawnmower.
That's a phenomenal deal.
Yeah.
Do you think he's going to accept the $900,000?
Wrote it up this morning. We'll see.
Awesome. If you had to guess, where do you think you're going to land?
I think he's going to take it, if I had to guess.
Oh,
but we'll find out here in the next day or so. If not, I got room to work.
Yeah.
With him carrying financing at 5%, makes a huge, because I'll go out and use private money for the $300,000.
Yeah.
So it comes out of my pocket, and I'll pay about 8 to 10% on that. But with the park as it is, numbers now, I can make all my payroll and everything. I mean, all my payments.
Yeah.
At occupancy now, it'd be a break even. But as soon as I put in the other 7 units and rent out the manager's place, I'm probably $5,000 a month cash flow.
Oh, that's awesome. Okay, so I want to go back and reiterate this deal. Where did the deal come from?
Just somebody knew we were looking, called.
Oh, perfect.
It's funny because we drive by this place all the time, and I'm telling my girlfriend, we need to find out who the owner is and call them. And a month later, we get the call. So yeah, it's just funny.
Okay,
how that
so someone in your network knew you were an investor who was looking for this.
Yes.
And so this is off market, there's no agents, no...
The owner has a friend that's helping him with, that's a real estate agent, but is not listed on the MLS.
Okay, cool.
So, which is good because we get to work with a professional without having to deal with all the real estate side of it.
Yeah. I agree. Sometimes brokers totally screw it up,
Yeah, get in the way.
especially if they don't understand deal structure or creative structures. And so did they tell you the initial offer price and the amount they wanted down and stuff like that first?
Yes. They came in and said they wanted $1,500,000 down, and they'd carry a note for the balance at 5%.
And then you countered and wrote it up the other way.
Yep.
That's awesome. And so where did the private money come from? Is that long-term relationships or?
Yes. I have sources, and I got people that have money that want to invest. So
then, and this is something like I think our listeners need to really pay attention to, but brilliant, by the way, is that even if it doesn't, like he can't improve it today, there's a margin of safety built in where today's existing rents can cover the private money and the debt to the seller.
Right. And taxes and insurance.
And so then he's got this safety net built in, and everything from there is just upside potential.
Yes.
Phenomenal. Let's go do hundreds of them.
Exactly. Bring them.
What other questions do you have, or what other things are popping around for you right now?
It's mainly just trying to get deals that make sense. When you pencil them out, they don't make sense. So we make offers anyways. Something looks like we make lowball offers.
Yeah.
And we point out at what you're performing at now, this is what it's worth.
Yes.
Yes, I see how I can build it in 5 years, but I always look at it. If the rents could go up, why didn't you raise them?
Yeah.
Why didn't you raise them? You say, yes, I can get everything up and I can make it worth 3 times as much in 5 years. So why do I have to build it out to give you that price?
Yeah.
I'm doing the work.
Yeah, they want you to take the risk and they want to take the reward without the effort.
Exactly. And I'm not willing to do that.
How many of those do you believe you have to make an offer on right now in order to get one?
100.
100. So
100 to 1.
100 to 1.
That's pretty much how it works. I'm looking at probably 10, 15 deals a day.
Yeah.
And most of mine look at in 2 minutes and say, nope.
Yeah.
But then there's certain ones that look interesting, then I put a pencil to it.
When you say look at it, what's like the top 5 things that you're analyzing real quick on a deal from your personal metrics to know, oh, this RV park or this mobile home park would work or it wouldn't work?
Income.
Yep.
To price.
Yep.
And then what's the upside? What can you do to improve it to make more money?
And is there a percentage of income to price that you're trying to hit?
Well, it's got at least break even. I prefer to walk in. If I'm putting money in it, I want to make profit right off the bat.
Yes.
And then I want to build from there.
So our goal is we got a margin of safety that's protecting us. Second goal is a profit right out the gate. 3, when we value add or rehab or just re-rent in some of these cases, that our margin can go up.
Yes.
Oh, I love it. This is beautiful.
I'm not one to buy without making money. I'm older, so I don't have 20 to 30 years to wait to see the profit at the other end. If I was 30 or 40, that's a different game.
Yeah, 100%.
Anton, I got a question for you on that note. So, John, you're doing one deal out of 100 right now. That's kind of like your success ratio, which obviously that's just how you get the deals, right? Creative financing. Anton, my question for you on that note is, what's your strategy for working with a seller that wants more than what their property is worth? Or what is your kind of like timeline for getting to the point where you get them to sell the property to you at a reasonable, fair market value? So
you have to remember, one, I was raised by builders, developers, and investors. So I've always been taught to look at things really long-term cycle. So there are sellers that I could tell they're overpriced, and then 3 years later end up doing a deal with them. So my strategy has always been very simple. Right out the gate, I start poking at what I believe the price should be, or the ballpark, to check the temperature in the barometer.
Right.
So if they want $1,050,000 and I think it's 900, Hey, as I'm standing here, I'm sitting here thinking about this, what's something like 850 sound like to you? And I'm just going to shoot it right across the bow to see if we're even in the same ballpark. Second is we go through the education process. The education process, like you were just saying, is we put together numbers, we put together comps, and demonstrate to them how we're arriving at our value. This is how we're arriving at our value. This is the homework that we've done. You can see these other ones are selling for this. This is what these other assets are performing at, and then same thing. Based on this, what do you want to sell it for?
Right.
Oh, I still want 1.1. Okay, so we're still 200 grand apart. Then I start going into something creative, like, okay, so if you want 1.1, how could we build a bridge really creatively in order to make this work? Are you willing to take 900 grand on a note?
At interest only.
At interest only?
Right. Or no payments. I've done them where I've done no payments for a year.
Bingo.
Yeah.
So we could maybe delay it or something of that nature. But a lot of times what you run into, to kind of fully answer this question, is you run into this emotional roadblock and you run into the greed roadblock. Regardless of it's actually worth the value or not, people always want more money than what they're worth and what the buyer's generally willing to pay. At that point, what we do is we back away from the deal, and that person just ends up going on some type of a consistent follow-up schedule. And so that consistent follow-up schedule for us quite often is 2 weeks or 4 weeks.
Right.
And every 2 weeks, I pick the phone back up. Hey, I know we spoke, about your mobile home park, 2 weeks ago. You said you wanted 1.1. I said 900. It wasn't working. How's 900 look today?
Yeah, exactly.
And then we end up following up over a long period of time. And I would say probably 10 or 15% of the time we get the deal right up front. And the vast majority, we get the deal later on in some type of follow-up because a life event happens.
Exactly.
Something has changed. They want to move closer to their kids, whatever it may be. And by us following up with them, we've demonstrated that level of trust and that level of commitment. And so with that trust and that commitment, they go, oh, you know what? John can pull the trigger. I need to call him now because, even though we didn't do a deal, we've talked over the last 6 months.
Right. I've chased houses for 5 to 10 years and have gotten them.
Yeah.
Just consistency. But like I say, I've chased one house for years. It was owned by 2 brothers. Finally, one of the brothers passed away. Then they were motivated to sell.
Yeah.
And I got it for less than I would have paid them originally.
That's like the biggest key there. It's like build a relationship, treat people awesome, be a good human, follow up, have good conversations, and then just say, is now the time right? Another thing that's also worked for us really well is mobile home park owners, guaranteed they know another mobile home park owner.
Yep. Landlords know landlords.
Bingo. So, John, as I'm following up with you, we've been talking about this for 4 months. Do you know of anyone else who's thinking about maybe selling theirs that, would like an offer from someone like me? And we've had that individual then refer us to one of their friends who was in a different situation, who has decided they were motivated at that time to get out.
Right. I've always found that you have to ask the question.
Yes.
Even if you probably can get a no, but it's always a no unless you ask.
Yes.
You ask the question. Could be no. Most likely be no, but you got to ask. But you're planting a seed in their head.
Yeah.
So no usually comes a yes eventually.
It does, because that price and that motivation and timing all of a sudden finally meet at some other point. So you're looking for mobile home parks. You're looking for RV parks. And what's happening with your current... Oh, and apartments too. Yeah. How's the apartment hunt going?
Running the same thing. Just everything's overvalued.
Yeah. And then is that here in the Seattle area or out of state?
No.
All out of state?
Or Eastern Washington.
Or Eastern Washington? Yeah. Okay. What's a deal that you started to put together or you were close to putting together lately? What prevented that from working?
What comes to mind is I looked at a place in southern Eastern Washington, Dayton, and it was 26 unit.
Yep.
It was owned by an older gentleman in his 80s. He was having health problems. But the problem is when he built this thing, he built it under one of the government grants for low income housing.
Yep.
and his valuation's really high compared to his rents. He has a lot of empties. It doesn't work. But I looked at the contract. He still has 17 years left on that 40-year contract, locked in at low rents. Like, it's not Section 8, but it's equivalent to that. So his valuation is real high. And it's just like, dude, this is where you need to be, because I can't really raise the rents other than what the government raises for the next 17 years. By that time, I got a 40-year-old building that's probably going to need a lot of repair. So
yeah, interesting. So what was the price delta on that one?
I think he wanted $2 million for it. I think I offered him $1 million, and I told the agent I might go up to 1.1.
Yeah,
but at the valuation, that's where I needed to be.
Got it.
And then I always show them my numbers. I try to present a package. This is why my price comes in at this, because this is my valuation.
And then was that one the same as the other models? Like, it'll perform today and cash flow a little bit, but if you go through
it would cash flow a little, not a lot.
Yep.
But there were some empty units, and I think you could bring up the rents a teeny bit, so you could make a little bit more. But it wasn't a home run, but it was still decent.
Got it. Would that be a private money as the down payment and the owner carrying also?
I basically told him I want him to carry. And the deal was, hey, he's old. I said, well, he can go into his trust.
Yeah.
So his family can get the money. So a lot of times I find that you got to find their motivation. Why are they selling? What do they need to sell? And a lot of them is, I'm just tired of doing this, but I want to buy an RV and travel. Yeah. So what are you going to do with the rest of the money? I'm putting it in the bank at 2% interest. How about you carry the note at 5%? And they're like, how's that work? Well, it basically comes down to you'll become the bank. Oh, okay. So finding their motivation is the thing. Why are they selling?
Yeah, 100%.
If they're trying to switch over to a 1031 to buy another property, then it's a little tougher sell. But a lot of people they're just done being landlords. They're just old. A lot of them are older, and they just want to be out.
Yeah, that's exactly what we run into too. Mm-hmm. A script that has worked well for us is: do you still want the income without the
hassle?
Yep. Would you like the income without having to do with sinks, toilets, and hot water tanks?
And renters.
and renters. That's always been a good script for us. What cap rate were you trying to hit with that deal as you were looking at that one, and then where do you think it would go to?
Well, that one was kind of stuck because you had that government contract.
Got it.
I try to get, if I'm out of town, I try to get 8, 10, 12% cap rate.
Yeah.
It's doable in other markets. Seattle market,
no way.
It's like 3-4% cap rate. And then, like I say, a lot of times they show you these cap rates, but it's before debt service.
Yeah.
So that it just doesn't work.
Yeah.
And 3-4%, I could take my money and stick it in a CD at 5.5%. That's 100% guaranteed and no risk. Why would I put it into $1 million property at 3 or 4% and take all the risk?
Exactly. Because of how high debt is, capital stacks are so out of alignment, and a lot of these properties are so out of alignment. If the Fed keeps rates higher for longer, like they keep saying they're going to, the next 2 to 3 years is going to be crazy, because you can't have a 4 cap and then the debt be 8.5.
Exactly. They have to align.
Yeah, because then you automatically have a 4.5% negative arbitrage against the property. You'd better off just to pay cash for it and just sit on it. Or, like you said, why have to deal with renters if you can get 4.75 out of a 10-year treasury right now?
Oh, there's 1-year CDs. The banks are offering at 5.5.
Yeah.
It's like 5.5% interest rate. Why would I put my money into a property that I got to take the risk on?
I love it.
I got a question. Actually, it's a follow-up to the script that you led with. Do you want the income without the hassle? Can you run through what that script looks like? First, Anton, and then actually, John, I want to hear your thoughts.
Ooh, yeah.
Because I'm sure both of you guys have gone through that, because a lot of people don't know that they could have the income without the hassle. They just assume I need to sell it. They need to get cash. So can you run through what that script looks like and what are the things that you're offering or proposing that you find gets you the most success?
Do you want the income without the hassle? That script is basically designed to try to get people to look at the beach ball from just a different angle, because they get so tied and caught up in the I have to sell and take the money. Well, what are you going to do with the money? What will that money do for you? Are you just going to put it in the bank, or are you actually going to go do something with it? When you start digging into it, with all sellers, we're looking for price, timing, and motivation. What's the price they want? What's the time frame that they want to do it in? And then what's the motivation for them to do it? Like motivation on a scale of 1 to 10, but also what's the core motivation? I'm getting older. I want to go spend time with my kids. As you mentioned earlier, I want to travel around in an RV. Well, that becomes a core motivation. Okay, if we could show you a vehicle that's going to create consistent cash flow, and we have a track record and a history of doing this, I think that's really one of the keys, Benji. We have a track record and a history of doing this where I can show you other examples that have worked out successfully. Would you consider being the bank? Generally speaking, the next thing they say is no. So almost always, and I'm just telling you what we run into, it's no, they object to it. And so you've got to kind of come back to, well, why are you doing this? What would you like to do? What would that income do for you? You've got to kind of inflate their dream and give them hope about a potential future, because a lot of the times they don't know what they're going to do with the money. So you're giving them a vehicle to do something with the money. And they're just worn out with the property, with the tenants. It's not always the tenant. Sometimes it's the property that has deferred maintenance for the last 10 years, and they know it's going to take a few $100,000 to come back through, rehab the property, and get it back in alignment. And then last but not least, you got to go into taxes. Are you prepared to give a large chunk of the money that we give you to the government in taxes? Or would you prefer to defer that over a longer period of time? Because if they accept monthly payments, they only get taxed on the money that comes in as it comes in. And so for someone who's thinking about going into a fixed income environment, or they want money without having to pay a ton in taxes, that's just another great vehicle. So that's usually what we do. It's price, timing, motivation. It's looking at the future and then chatting about taxes. What did I miss?
You really didn't miss much, other than, I always look for what's their motivation for selling.
Yeah.
And then I always want to try to get them to carry the note.
Yeah.
So now you got to convince them, what are you going to do with the money? Well, a lot of them say, I don't know. I just going to sit on it, put it in the bank. So when you get to that, I'm going to sit on it, put it in the bank, then you figure out what they really need for whatever toys they're going to buy. Then you can convince them that, hey, I can get you probably close to the same income as you were getting as you own the property without all the hassle. So how's that sound to you? And they're, yeah. And then it's like, okay, well, you need to carry a note. Most people don't understand how that works. Says, well, it's like this. You become the bank. And then they always give you that question look on your face. Well, when you sign for the mortgage for this thing for 30 years, you basically are paying the bank. You come that position of the bank.
Yes.
Well, safety. That's probably your next concern is safety, right? So now you got to tell them, hey, you're first on title, just like the bank was when you bought it. Oh, okay. So now I understand. So you kind of got to educate them on how being the bank is smart for them. And then the deferred taxes, only having to pay capital gains on the money comes in. You sell this thing for $1 million, you're going to spend $300,000 to $400,000 in capital gains taxes. Oh, really? Yes. Unless it's your own private residence. But usually we're looking at commercial stuff. So then they say, oh, I didn't realize that. So you're going to flush $300,000 out of your $1 million right off the top. But if you carry a note for 10 years, you get to spread that out.
Yeah.
John, sorry to interrupt.
Yeah.
Because I know you, a lot of listeners would probably think, oh, that probably isn't as easy as it sounds, or maybe it takes longer. Correct me if I'm wrong. does that actually happen in that first conversation sometimes when they just have that light bulb moment? Because the way you described it, a lot of people go, well, I don't mind being the bank.
Exactly.
Less taxes, right? And can you kind of talk about how sometimes you can surprise even yourself if you just explain it in layman's term, converting somebody from they want all the money up front to literally becoming the creative financing source?
So usually I can convince them on the idea of being the bank. I mean, when I get done, they understand the concept. Sometimes it takes them a while, follow-up conversations to get it through their mind. That's a better selection for them, because in their mind when they're selling it, I'm going to get this big chunk of money, that's what I want, and that's what's stuck in their head. So to change that thought to, hey, here's a better alternative for you, sometimes takes a few conversations. But being the bank, usually you can get that pushed through right away, because once you open their eyes to that and you say, it's just like when you bought the mortgage, they were the bank.
Yeah.
You get that position, and your safety is you still have deed on the property, just like the bank did when you bought it. So that's pretty easy to convince them to understand that. Sometimes it's harder to get them to understand that it's a better solution to get money every month than it is to have a big chunk and pay all those taxes.
Yeah, yeah. One other thing that I'll add to that is when we say to them, be the bank, and I'm remembering scripts and things that we've said in the past, is I also say, well, doesn't the bank make all the money?
Exactly.
Doesn't the bank control all the money? So wouldn't you like to be the person making the money and controlling the money, just like the bank does? Because I love it how you said, you're in a first position, just like the bank.
Yeah.
And so you're relating it back to them of this is how they do it. Why not be a bankster like everyone else?
Yeah. Just quick story. One of my mentors, I'll make it short.
No, I love it.
He always says, one of his mentors told him he was driving through San Jose, California on the freeway, and he was talking to his mentor, and he says, pull over on the side of the road and look at all the buildings downtown. Says, oh, okay. So he pulls over and he says, what do you see? I don't know, a bunch of skyscrapers, right? He says, well, what do you see in common on them? I don't know. He says, well, look a little closer. He goes, well, either insurance names on the buildings or banks on the building. So who's making all the money? It's the banks or the insurance companies. Be the bank.
Yes. By doing these deals and creative financing, so listeners, this is the part you need to pay attention to. When you're controlling the bank, the terms of the deal, the interest rate, the length, the balloon payment, the amortization schedule, and you're able to have that negotiation, you are being the bank.
Yes.
This is going to get your name onto one of those buildings. This is the actual creation of money. That's what people really need to understand, is that when you're doing a deal and it's seller financed and it's a creative deal, you're actually creating money that didn't exist. And then you're creating that for your family, for your legacy, whatever it may be, and you're getting better terms. Because, you just asked for, 5%, and today's prevailing interest rate is probably 8.5 or 9.
Right. I'm selling some properties in Montana, and the prices have gone up. I've had them, anywhere from 8 to 14 years.
Yeah.
And they've had tripled in the value. So now I'm selling them on contract. I'm the bank.
Love it.
I have one left. I got one under lease purchase, and he's working towards this purchase price.
Yes.
The other 3 I'm carrying notes on, and I'm carrying notes at 7%, which is fair to them.
Yep.
It's good to me because I owe nothing on the properties.
Yep.
I'm getting more money out of a payment than I am out of rent. Was rent, and I don't have to fix their toilet anymore. Amen.
So I want to dig into that because this is brilliant, and this is something our audience needs to hear specifically. So pick one that you like. Okay. What did you pay for it, and when?
I just sold one. It's a single wide on a nice lot with a garage. In town. I paid $50,000 for it. I just sold it for $150,000.
And when did you pay $50,000 for it?
I think I've had it 12 years.
Okay.
So I've made money on it all along through rent. I paid cash for it. I flipped the house and paid cash for it. So I've made, about $400 a month for the last 12 years. Now I just sold it for $150,000. I got $10,000 down. Actually, I got $5,000 down, and he owes me another balloon on the other 5 by the end of April. So when his taxes come back, his payments at 7%, it's like $964 a month for the next 30 years.
That's awesome. But what was the rent?
Rent at that time, I was at 4.5. It should have been about 6 because I'm behind on raising my rents, but I had a real good tenant that had been with me for 10 years. So I was behind on raising my rents.
So moral of the story is the market rent would have been about $650.
Right.
Okay. And then
Get $950.
and we're getting $950 for it. No roofs, no sinks, no toilets, no hot water tanks.
Exactly.
We got a down payment. We're getting a balloon.
Mm-hmm.
And you've got someone who's already lived there for a long period of time, so they already know everything about the property.
Well, actually, I'm selling to a neighbor, but
Oh,
they
to the
know
neighbor.
the property.
Got it.
The guy that I was renting to, long story short, he moved out. So
Okay,
I'm
got
selling
it.
to the neighbor, which knows the house.
Yep.
So, and they know the issues with it because it's a 1972 single wide.
Yeah. People don't really consider this. So you got, just for rough math, open up the good old calculator on the phone. So it was 50 grand into it total.
Mm-hmm.
So we're 45 into it right now, after the 5 grand they gave you.
Mm-hmm.
And you're getting 950.
Mm-hmm.
So $950 a month times 12 is 11,400. 11,400 divided by 45,000 is a 25.3 cash on cash return. That's gangster.
Yeah, but you forgot. I just took 12 years worth of rent out of it. I'm going to say over those 12 years, I probably netted $300 a month. So that's $3,600
Yes, a year.
a year times 12. So that's
yes.
for over $40,000.
Good point.
So
So
I've almost got my money back, what I paid for it in the rent for the 12 years. So I'm pretty much clear on it,
yes,
right? So now I just sold it for $150,000.
that's a phenomenal investment.
And I put in there, I don't want to be paid off.
Yeah.
I tell them, I don't want you to refinance. I don't want you to pay off.
Yeah.
I want the payment every month. So I got a $10,000 prepay penalty built in there in the first 5 years.
Perfect.
Because it will cost me money for taxes if they pay me off because of the capital gains. Plus, I want to make an incentive that hurts them to pay me off.
Yes, of course. Listeners, if you're hearing this and you like this, hit the like button, hit the subscribe button. We want to always be having these conversations as investors. Sometimes we get so caught up in, we have to do things a certain way. In this new market, owner financing is back like crazy right now. We talked about other examples on previous episodes, and all you've done is creative deals for years. And so this is the market to go do creative deals because that's the only way you can make up for ridiculous cap rates that are too low and super high interest rates.
Or overpriced.
Exactly.
A lot of times you can give them the price they want if they give you the terms.
Yes.
Yeah.
Yes, it's basically your price, my terms,
Yes.
or my price, no terms.
Right. Exactly. Yeah. Usually when I make an offer, I make 2 to 3 different offers on it.
Yeah.
So I give them 2 to 3 different scenarios. Carry the paper, we can do this. If it's cash, it's this. These are my,
And then do you write out each one of them in their own offer?
yeah.
Oh, cool. So you present, these are full offers.
Yes.
Here's offer A, B, and C. Which
Yep.
one works best for you?
Yep.
Awesome. So what's next? You're looking for a apartment, looking for RV, looking for mobile, home park. What else?
I'm still doing flips.
Okay.
My brother and I have 2 going. I'm looking at maybe closing a deal on a new one local here in the next week or so.
Well, let's work through that for the audience then. Where typically do you buy a flip? How much does it cost? How much do you put into it? What's the approximate timeline?
I usually buy local
Yep.
because I like to work on it, or I work with my brother who's a contractor, so we do deals. So he don't want to be less than an hour from his home. So
Okay.
we try to stay local.
Yep. So you're mostly up here in the north end of
Yes.
Seattle then?
Yep.
Yep.
I won't go to Seattle. I'm going to do a flip in Seattle if you gave it to me.
Me either.
If you gave me a house in Seattle, it'd be on the market tomorrow. There's a lot of deals in Tacoma, but don't want to fight the traffic. So I
Yep.
stay up here in the north end.
Yep.
We've kind of changed up. We were doing entry-level houses and above. Now it's entry-level houses only.
Yep.
We try to hit that strike point of 450 or under.
Yep. And is that just to create that margin of safety then because the upper end of the market's getting beat up?
Well, it's mainly because of interest rates.
Yeah.
So that guy qualified for $700,000 when it was 3% interest. Now only qualifies for 4.5%.
Yep.
So he's finally coming to the justification in his head that he can't have that $700,000 house. It's taken 6 months to a year. Now he realizes he needs to buy a house. The wife don't get the fancy kitchen.
Yeah.
They can get what they can afford.
Yeah.
So
yeah.
I do flip mobiles too.
Yeah.
I find there's a great market in mobiles.
Yeah, we've done that too. Phenomenal, to be honest. And so your typical as repaired value is around 450 to 500 then?
No, I try to say that, upper threes to 450.
Okay, got it. And so that's like in the outskirts then.
Yeah, I mean, out in the valley, Monroe out to the valley.
Got it.
I'm looking at one in Mount Vernon right now. So it's a small 2-bedroom. I'll probably make it a 1-bedroom.
What's the average timeline and the average amount you spend on repairs?
Oof, that really varies. The repairs can be anywhere from 20 to 100 grand.
Oh, big. Okay.
Yeah, so depends on what it needs.
So you'll take on
hardcore rehabs. Yeah. They don't scare me. The messier, uglier it is, the better I like it.
And so is your goal based on just the actual return, or is it based on the timeline? How do you evaluate which ones you're going to go for?
Timeline, it's just fast to get in and out.
Yep.
Obviously, your holding cost, so you got to put that in there.
Yep.
Before you could, I've bought them, flipped them, and sold them in 62 days.
Yeah.
From the time I bought it till the time I closed on selling. But that isn't the market now. So the market now is, there for a while it was hard to get materials, so that stretched your timeline.
Very
now
much so.
It's not so much. But you're on market instead of a day and a half, you're on market 30, 60 days maybe.
Yes. We
just did one with strike point was 419 out in Gold Bar.
Yeah.
Was a double wide with an ADU. Actually, we were able to get that under contract in 14 days.
Oh, that's really good.
Quick. But like I say, there's only like 3 houses in the valley out there that's for sale. So
yeah. And so your average margin then is what, 50 grand?
Yeah.
Yep.
30 to 100 depends on the deal.
Yeah.
Depends how fast you can get in, how much money you put in. And if we don't got much going, I'm okay with tightening up the numbers to keep busy.
Yeah. That's awesome.
Sometimes you get home runs.
Where are you finding most of those flips from?
I do get some off the MLS.
Yeah.
Because I have real estate agents like yourself
Yep.
that know what I do.
Yep.
And they'll call me, hey, this is going to be listed in 3 days. You better go look at it now.
Yeah.
So as soon as I push list, I can put your offer in if you want it.
Yeah.
That kind of stuff. Word of mouth. People know what myself or my brother do. So
Yep.
oh yeah, let's call John or Bob. They might be interested, and I know they can pull the trigger and buy it. So.
Yep. So MLS, word of mouth. Anything else?
Wholesalers bring you stuff.
Yeah.
I do some bird letters, but it's usually Pacific. I see a house, I'll do the research on it. It's vacant. The people live out of town. They've had it a few years. I'll send them a Pacific letter for that. But I don't do the massive mailers. It's just nothing I've really gotten into. I'd rather have somebody else do that.
And then you usually have like 1 or 2 of those going at a time?
Letters going out?
No, flips.
Flips, yeah. Mm-hmm. To myself and my brother, yeah. We usually have 1 or 2.
That's awesome.
John, for the beginner investor or maybe somebody that's got money, they've done rentals, but they want to get into, maybe potentially some flips, a commercial, or even mobile home parks, what's your advice for them, especially in this environment where people are staying in their homes, maybe not as much movement, and sellers are more hesitant to do things, maybe even creative things? What's kind of your advice for people right now in 2023 going into 2024?
Well, if you have money and you don't really know the flipping business, I would say team up with somebody that does. Become their money person and then get involved in it so you learn, because you don't want to jump in. I've seen over the years, a lot of people, I'm going to get in flipping because I've seen it on the TV show, and they lose a lot of money because they don't know what they're doing. Because they look at the show, look at that, I can put a bathroom in a day and a half. It's not realistic. So team up with somebody that knows the business, become their money partner, and then maybe work with them to learn it for a couple. You make a lot less profit, but you're not going to make mistakes.
Anytime you can get into one of those mentor relationships, partnerships, whatever it is, you're actually time traveling. Like you're warping forward in time. So always be willing to give up some money, some profit, whatever it is, to get someone else's expertise.
Yep, for the education.
In the early 2000s, there were deals I put together for free. And people were like, why would you do this for free? I was like, because you know 20x more than I do, and I just want what's in your brain.
That's right.
So if I feed you this deal, I just need you to explain to me what you did, how you did it, why you did it, how much it cost, and then what the outcome was. That's all I'm looking for on this one. But it's so smart, sir. You can time travel on someone else's knowledge.
That's right. Don't reinvent the wheel.
Yeah.
That saying, team up with somebody that's doing it and learn from them.
100%.
You won't make as much money, but you're paying for your education, basically.
Bingo.
But you're paying not to make mistakes.
Yes, and mistakes in flipping, apartment buildings, RV parks, they're extremely costly.
Well, hundreds of thousands of dollars.
The smallest mistake in a flip is like 15 to 20 grand. A big one or an unforeseen problem, 50, 100, yeah. When you take that over to an apartment building, that number just multiplies, because if you make the mistake and it's got 26 units like that one that you mentioned, that could be 26 mistakes.
Oh, yeah.
Right in a row.
It could be $1 million mistake.
Bingo.
It could take everything you own.
That's one of our philosophies that we really come back to very regularly. Limit your downside risk. Okay, even if your return goes down, limit that downside risk and maximize the upside potential while limiting the downside risk. Because, back to that apartment building, if you make that mistake and that's $1 million, that sinks you, that could take you a decade to recover from. Now, what if you brought that same deal to someone who does apartments all the time, and maybe you just threw in a little money with them, but you were able to learn the whole process? Now you can prevent yourself from making that $1 million mistake.
Yeah, become a 10% partner. You get the education and you make a little money.
Bingo.
Yeah.
Bingo. Brilliant. Anything else on your list, Benji?
Last question, I promise. This is going back to that whole process of finding out someone's motivation, maybe putting out an offer, exploring creative financing, explaining they become the banks. The one pushback I can think of that somebody that has no clue about this stuff, and I would love to know from you, John, first, and Anton, I know you have an answer for this as well. They're going to ask, well, what if you don't make the payment, right? What if you default? What is your explanation? I know you did talk about the first lien position, but can you maybe describe more in depth what you would say? Because I'm sure people have asked that, right? It's like, well, I don't know how that all works. Like, what's the safety net here for me?
So I go back to, you're the bank. So when you made that loan with the bank to buy this property, if you didn't make the payments, what would happen? Well, the bank would take it back. Exactly. You're the bank. You take it back. You go into foreclosure. And more than likely, the value of the property's gone up because I made payments and I probably did repairs on it. So your downside is, yes, you're going to have to go into foreclosure. You'll lose a few months worth of payments. You have to pay an attorney to foreclose on me. It probably will take 90 days, maybe 120. But the upside is now you're getting your property back that I've made all the repairs on, so your property's probably worth more money. It will cover that spread, if not more.
Boom. That was brilliant. I think maybe the one thing to add, so you're doing an owner finance deal and they say, how am I protected? How am I protected? One, you're the bank. Two, and I love what you said was, well, what happens if you don't make the payment? We're taking them mentally to the future spot, and well, the bank would foreclose on me. Okay, so do you have that option for you then? Yes, I do. Okay, our intention is to value add on this. And so we tell them, I'm going to be spending 200 grand on your property. If you even had to foreclose on me, and let's say it costs 30,000 to foreclose, but we put 200 grand into your property, would you still not be 170 grand ahead, plus you'd have the property back?
Plus, that $200,000 I put into it, I probably upped the value double that. So actually, you're probably up $400,000.
Bingo.
Yep.
Plus, the value of your property has gone up. Plus, we've started cleaning everything up and getting better tenants in place, better leases in place. So, one, that's never happened to us. So I always like to make that part really clear. It's like, that's not happened to us.
Could it happen? Yes.
Absolutely.
No, it could happen.
It totally could happen.
But that's not where I play and I make my payments.
Yes.
And I have enough assets to cover that.
Yes, exactly. And, could I get hit by a bus? Yes. All of those things. And so one of the things, too, is like, and then I kind of giggle and go, well, if I got hit by a bus, technically my CFO would just step in and make sure everything's moving to take care of my family. Plus my life insurance would kick in. So that one's probably, but let's say my whole family and staff all got taken out at the same time. I was like, yes, then it could be a problem. But wouldn't you be in a better situation?
Yeah.
And then I nod my head.
Yeah. And then you can always, if they're really skeptical, you can show them your asset list.
Yes.
Show them what I own. Hey, I own this, and this is what I have in value in it. And if one step farther, you're trying to convince, here's my 1040s. Here's what I make a year.
Yeah.
Here's my assets. My 1040s, 1120 are 250 pages. You want to see them?
Yeah.
So I can prove to you that what I'm buying from you with my assets, I could easily buy again. Now, if you don't have those, you can just say, hey, my income is this. I can afford to make this payment if my renters move out.
Ballsy. 1040. Never heard of that move before.
What? Just drop the
1040.
drop the tax return.
Just offer it to them. Now, usually if you sit there and say, oh, I'll show you my tax return, they're like, oh, well, he's serious.
Yeah.
Do I have to? No, but I'm just saying if you offer it up, that just gives them more security that you're serious, that you can perform.
Love it. Okay, like, subscribe, comment. Thank you for listening.